PSUs have been the real stars of the past year, showing tremendous growth and still rallying. Now, why should you be particularly interested in PSU stocks? The answer lies in the robust growth they have exhibited over the past year. With a spotlight on infrastructure, railway, and energy, these sectors are at the forefront of our government's agenda, making them great investment options for 2024. The Nifty 50 is eyeing the 23,500 mark by the year 2024 end. The Modi government's consistent focus on key policy platforms like railway, security, infrastructure, and power plants over the past 5 years has created a sense of continuity. So, why change your investment theme when you can align with the ongoing government spending trends? Today, we have handpicked the top 7 PSU stocks from the infrastructure, railway, and energy sectors that could potentially be the game changers in your investment portfolio. All these stocks are priced under Rs 250. If you are new to my channel, please do subscribe. Also, check out my playlist, Best Stocks to Buy for the Long Term. So let's get started. The first company plays a crucial role in supporting one of the largest rail networks in the world. This stock is a mini Ratna 1 and schedule a public sector enterprise under the Ministry of Railways, Government of India. I am talking about the Indian Railway Finance Corporation. The surge in railway stocks, including IRFC, is attributed to expectations of a record-high budget allocation for the sector. Incorporated in the year 1986, IRFC serves as the financial backbone for the Indian Railways. It is registered with the Reserve Bank of India as ANBFC and is classified under the category of an infrastructure finance company. Indian Railway Finance Corp borrows funds from the financial markets to finance the creation of assets, which are then leased out to the Indian Railways or any entity under the Ministry of Railways. The range of services offered by IRFC is extensive, from financing the acquisition of rolling stock assets to leasing railway infrastructure assets and lending to various entities under the Ministry of Railways. Over the last 3 decades, it has played a significant role in supporting the capacity enhancement of the Indian Railways by financing a proportion of its annual plan outlay. IRFC follows a leasing model with a typical lease period of 30 years. This comprises a primary lease period of 15 years followed by a secondary period of 15 years. At the end of the lease, assets are usually sold to the Ministry of Railways for a nominal price. Its primary business includes financing rolling stock assets, leasing railway infrastructure assets, and contributing to national projects of the Government of India. Additionally, IRFC is actively involved in lending to companies in the railway sector. Their clientele includes entities like Rail Vikas Nigam Ltd and Ircon International Limited. The extensive reach of IRFC is evident in the broad spectrum of services they provide within the Ministry of Railways. IRFC maintains a strong linkage with the Government of India. The government appoints the board of directors and is actively involved in strategic decisions, borrowing, and operational targets. All financial risks are passed on to the Ministry of Railways. In the fiscal year 2021, IRFC raised funds amounting to $3 billion through various channels, including a syndicated foreign currency-denominated USD loan. Their strategic funding plan aims to minimize borrowing costs. IRFC's loan book is highly concentrated, with nearly half allocated to the Ministry of Railways or related entities. The cumulative funding to the railway sector has crossed the impressive mark of approximately 5,04,000 crores. Their borrowing portfolio in fiscal year 22 includes taxable bonds, external commercial borrowings, rupee term loans, and 54 EC bonds, showcasing their diversified approach to financing. Breaking down their revenue, IRFC derives income from various sources, with a significant portion coming from interest on loans, interest income, rolling stock, and project assets. IRFC's exemption from RBI's asset classification norms and exposure norms contributes to its impeccable asset quality. With no history of non-performing assets and tax liability, IRFC has maintained a robust financial position. A recent milestone for IRFC was the signing of a Memorandum of Understanding with India Infrastructure Finance Company Ltd in October 2022. This collaboration aims to leverage financing opportunities for viable infrastructure projects. Indian Railway Finance Corporation, with a market capitalization of 2,27,314 crores, operates with a current stock price of 173. Price-to-earning ratio is 37.49, higher than its sector pay ratio of 25.11. Stock price rose 444.13% and outperformed its sector by 391.71% in the past year. Debt to equity ratio of 8.52 is higher than 1. Return on equity for the last financial year was 13.93%. Annual revenue rose 17.89% in the last year to rupees 23,932.63 crores. Its sector's average revenue growth for the last fiscal year was 12.92%. Annual net profit rose 4.06% in the last year to rupees 6,337.01 crores. Its sector's average net profit growth for the last fiscal year was 66.72%. The company is giving better long-term returns than the industry. IRFC is bullish but also overbought on daily chart. The second stock is the largest state-owned natural gas company. This stock has been an integral part of India's energy landscape since 1984. They are an integrated energy company in the hydrocarbon sector. This stock operates over 65% of India's total CNG stations. I am talking about Gail India Limited. This stock is responsible for 67% of PNG connections in India. They supply gas for about 73% of India's fertilizer production. They also supply gas for about 63% of India's gas-based power. Gail is among the top 10 global LNG portfolio marketers, with the government of India aiming to boost the share of natural gas in the country's energy mix. This stock stands to benefit from the favorable demand growth for natural gas. Beyond transmission, Gail has ventured into downstream sectors like petrochemicals and LPG, diversifying its revenue streams and leveraging its efficient natural gas sourcing capabilities. By investing in startups in various sectors, Gail is actively contributing to the evolution of the industry. This company was initially given the responsibility of construction, operation maintenance of the Hajira-Vijaypur-Jagdishpur pipeline project. It was one of the largest cross-country natural gas pipeline projects in the world. Gail, with a market capitalization of 1,08,752 crores, operates with a current stock price of 165. Price-to-earning ratio is 20.57. Lower than its sector pay ratio of 23.26. Stock price rose 63.92% and underperformed its sector by 4.15% in the past year. Debt to equity ratio of 0.25 is less than 1 and healthy. Return on equity, ROE, for the last financial year was 8.64%. The dividend yield is 3.46%. It is a good time to consider buying as the stock is underpriced and is not in the overbought zone. 76% by rating from analysts. The third stock is the largest producer of iron ore in India. This stock has been a major player in the exploration and production of iron ore, diamond, sponge iron, and vine power. I am talking about NMDC Limited. This stock has been consistently profitable and has positioned itself as a leader among Navratna companies. One notable development is the favorable court order from the Supreme Court, allowing private sale of iron ore in Karnataka, benefiting NMDC. This is crucial as NMDC operates two mines in the state with a peak rated capacity of 14 million metric tons per annum. NMDC proudly holds the title of the largest iron ore manufacturer in India, contributing to 18% of the domestic production. NMDC operates 7 iron mines across India. Beyond iron ore, NMDC operates India's only mechanized diamond mine in Panna and has ventured into coal mining in Jharkhand. The company has a global presence, with interests in Legacy Iron Ore Ltd in Australia and coal ventures in Mozambique. NMDC is a leading agency in natural resource exploration, allocating funds for research and development. With a vision to become one of the world's low-cost iron ore producers, NMDC has ventured into steelmaking. Vision 2025 aims to enhance iron ore production capacity to 67 million metric tons per annum. At present, 5 to 10% custom duty is imposed on critical minerals. There is news that the government might remove custom duty from critical minerals. This will be a big boost for the stock. Debt to equity ratio of 0.02 is less than 1 and healthy. Return on equity, ROE, for the last financial year was 20%. The dividend yield is 3.41%. It is a good time to consider buying as the stock is underpriced and is not in the overbought zone. 82% by rating from analysts. The fourth stock is India's largest shipping company. This company has grown from a modest liner shipping company with 19 vessels to the largest Indian shipping giant it is today. I am talking about the Shipping Corporation of India. The Shipping Corporation of India holds the prestigious title of being the largest shipping company in India. From its humble beginnings, ASCI has expanded its fleet and services to become a formidable force in the maritime industry. Designated as a Navratna company by the Government of India in 2008, ASCI is a powerhouse in the shipping industry. It operates in various segments, including breakbulk services, international container services, liquid dry bulk services, offshore services, and passenger services. The tanker segment accounts for a significant 62% of SCI's revenue. It's the largest tanker owner in India, with a versatile fleet catering to Indian crude oil and product transportation. The bulk carrier segment contributes 14% to SCI's revenue. With a fleet of 15 vessels of various sizes, ASCI transports a variety of cargo, including iron ore, coal, grain, and more. ASCI plays a crucial role in providing offshore marine logistics support to the Indian oil industry, constituting 7% of revenue. They own and charter vessels for anchor handling, towing, and support services. ANMDC, with a market capitalization of 63,609 crores, passenger services, operates with a current stock price of 200 for the Andaman Nicobar price-to-earning ratio is 10.85, services, lower than its sector pay ratio of 11.49. They are in talks with the Inland Waterways Authority of India for commercial operations sector by 8.36% in the past year. Sailing through for nearly 5 decades, the ASCI today has a significant presence on the global maritime map. As the country's premier shipping line, the ASCI owns and operates around one-third of the Indian tonnage and has operating interests in practically all areas of the shipping business, servicing both national and international trades. Shipping Corporation of India, with a market capitalization of 8,662 crores, operates with a current stock price of 190 rupees. Price-to-earning ratio is 9.87, higher than its sector pay ratio of 7.64. Stock price rose 36.25% and underperformed its sector by 36.47% in the past year. Debt-to-equity ratio of 0.32 is less than 1 and healthy. Return on equity for the last financial year was 12%. The company is generating increasing cash from operations. It is a good time to consider buying the stock as it is not in the overbought zone. Stock is from the renewable energy sector. This stock has been playing a crucial role in promoting, developing, and providing financial assistance for new and renewable energy projects. I am talking about Indian Renewable Energy Development Agency Limited. The company offers a comprehensive range of financial products and services, starting from project conceptualization to post-commissioning, for renewable energy projects and other value chain activities. This includes equipment manufacturing and transmission. IREDA has been actively involved in financing projects across multiple renewable energy sectors, such as solar power, wind power, hydropower, transmission, biomass, waste-to-energy, and more. IREDA has been improving its asset quality, as evident from the gross non-performing assets and net non-performing assets figures. These have decreased over the years, demonstrating a positive trend. IREDA has a diversified portfolio across 23 states and 5 union territories in India. The credit rating of IREDA is noteworthy, with 93.41% of secured assets. The company holds AA, stable, ratings from credit rating agencies such as India Ratings, ICRA, and Acuit, reflecting its financial stability. The company is a wholly owned Government of India enterprise under the Ministry of New and Renewable Energy. IREDA operates as a Mini Ratna, Category 1, Government of India enterprise. The company has been consistently recognized for its excellence and outstanding contributions to the renewable energy sector. This stock is the first Indian financial institution to raise green masala bonds in 2017. This stock got listed only recently and now is at an all-time high. IREDA Limited, with a market capitalization of 41,405 crores, operates with a current stock price of 161 rupees. Price-to-earning ratio is 119.42, higher than its sector pay ratio of 19.09. Debt-to-equity ratio of 8.01 is higher than 1. Return on equity for the last financial year was 11.56%. It is not a good time to consider buying the stock, but keep this stock in your watch list. The sixth stock is an Indian company which provides value-added services. This stock has become a powerhouse in the construction sector, known for its expertise in project management consultancy, engineering procurement construction, and real estate. I am talking about NBCC India Limited. NBCC thrives in three primary business segments: project management consultancy, PMC, engineering procurement construction, EPC, and real estate development. The company's diverse portfolio includes civil construction projects, infrastructure works, and both residential and commercial developments. NBCC isn't just shaping India's landscape, it's leaving its mark globally. With ongoing projects in Dubai, Maldives, Mauritius, and Seychelles, the company is expanding its reach. NBCC is behind some iconic projects, including the Indo-Bangladesh border fencing, Indo-Pak border fencing in Gujarat, and the renovation of Jallianwala Bagh in Amritsar. These projects showcase the company's commitment to excellence. The company has been showered with awards, from the Indian Buildings Congress Awards to the Golden Peacock Business Excellence Award. Let's look at the company's journey through NBCC's milestones, from its incorporation in 1960 to becoming debt-free in 2008, achieving Navratna status in 2014, and more recent milestones like signing a Memorandum of Understanding with Delhi Transport Corporation in 2020. 1 week ago, NBCC bagged a 1,500 crore worth order from National Cooperative Development Corporation, NCDC, to build warehouse and other agriculture infrastructure at various locations in India. This will be a big boost for the stock. The company is debt-free. Return on equity, ROE, for the last financial year was 20%. It is a good time to consider buying the stock as it is not in the overbought zone. 33% buy rating from analysts. The seventh stock is an integrated engineering and construction company. The company specializes in major infrastructure projects, spanning railways, highways, bridges, flyovers, tunnels, and more. The center has granted Navratna status to this state-owned firm. I am talking about Ircon International Limited. In the railway construction sector, they excel in new railway lines, rehabilitation conversion of existing lines, station buildings, bridges, tunnels, signaling, telecommunication, and railway electrification. Ircon stands out as the only Indian PSU and one of 5 Indian companies listed among the top 250 international contractors. It's recognized as a sectoral leader in transportation infrastructure, particularly in the execution of railway projects. Ircon's diverse services include project management consultancy, engineering, procurement construction, public-private partnership, and real estate. Ircon's revenue mix is primarily derived from the railway sector, 94%, followed by highways, 5%, and other sectors, 1%. With its headquarters in Saket, New Delhi, the company operates through 54 project offices and has a global footprint with offices in Sri Lanka, Bangladesh, Malaysia, South Africa, and Algeria. Ircon has successfully delivered 128 projects in 25 countries and over 401 projects in India. Some of its notable customers include Gail with a market capitalization of international entities like the Ministry of Transport, operates with a current stock price of 114. And Bangladesh Railways. Price to earning ratio is fueled by its 11 subsidiary companies and pay ratio of 38.36. The company has also entered into strategic alliances, including a joint venture with Turbine Port Authority for a proposed harbour project in a neighbouring country. Looking ahead, Ircon aims to expand its international portfolio, exploring new areas for business diversification, including renewable power. The company envisions transitioning from a construction-centric entity to a diversified company with a broad portfolio of contracts and projects. The International Chamber of Commerce, ICC, pronounced an award in favor of Ircon with respect to a matter of arbitration with Eskom Holdings SOC. The stock has hit an all-time high. Debt to equity ratio of 0.29 is less than 1 and healthy. Return on equity, ROE, for the last financial year was 15%. It is a good time to consider buying the stock as it is not in the overbought zone. 100% buy rating from analysts. Remember, always conduct thorough research before making investment decisions. I hope you found this video informative and subscribe to our channel for more informative videos.